This video is designed to help you start a remodeling business. At the end of the video, you'll find a valuable gift. It's a remodeling business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful remodeling business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. Before starting your remodeling company, spend some time thinking about how much time and money you can put into the business. On average, a professional remodeler will need about $50,000 to $75,000 to get started. This would cover the cost of all the necessary tools, a truck or van, and the proper licensing and insurance. The average startup costs for a major remodeling business could be in the range of $250,000 to $500,000. When your business takes on large renovation projects, you'll need to pay for most materials up front. And you'll also have subcontractors to pay. Defining the scope and vision for your remodeling business will be time well spent and will help you map out your company's future. Starting small. If you're not ready to take on Chip and Joanna just yet, that's okay. You can start small by taking on projects within your wheelhouse. That way, you may already have many of the tools and skills you need to get started. And it's okay if you're still learning. If you're an excellent carpenter who doesn't know much about plumbing, try to gain experience by finding an entry-level opening on a job site. Continue to work your way up, gaining new skills in every area of the home. Carving out a niche for yourself is another way to put your small business on a path to success. Let's say you have a knack for designing mudrooms. Your first client asks you to build a functional mudroom for their growing family. The new mudroom becomes the envy of the neighborhood, and suddenly everyone wants to hire you. You just grew your business without even trying. Starting small doesn't limit your future growth. It helps you focus on your strengths right now. That may mean specializing in one or two areas. Here are some of the popular remodeling trends you could focus on: home offices, mudrooms, spa-inspired bathrooms, basement and attic remodeling, outdoor living spaces. Going big. If you think you're ready to launch a major remodeling business, it's time to write a solid business plan. This will help you establish your goals and learn everything involved with starting and running your business. When it comes to how to start a remodeling business, you'll also need the startup money to fund it. If you don't have enough money up front, you may need to secure a loan, which is another reason why you'll need that business plan. Lenders will generally require a business plan outlining specific goals. Typical details in a business plan would include information such as: what services will I provide? What experience do I have? Who is my target market? How many employees will I hire? How much money will it cost to start the business? How much profit will I make in the first year? Naming your business. You've set your goals. Now it's time to come up with a business name. While this is a serious task, it's also time to have some fun. After all, you're in the business of making homeowners' dreams come true. Get creative and choose a name that will inspire potential clients and get you noticed. If you get stuck, reach out to friends and family to brainstorm some unique names. It's always good to have a couple of options, just in case Jackhammer Construction is already taken. Spoiler alert, it is. Check with your state's filing agency and the U.S. Patent and Trademark Office to make sure no other business is using the name you're considering. Registering your business. With your name in place, it's time to register your business. There are a few ways you can set your business up, and each comes with its own pros and cons, as well as its own legal requirements and fees. When deciding on any business structure, it's a good idea to consult with an attorney or business advisor. Sole proprietorship. A sole proprietorship links you, the owner, to your company. This business structure is easy to form, inexpensive, and offers tax benefits. But it does not protect you from personal liability. Corporation. A corporation model allows the business to operate as a separate entity, protecting you from personal liability. Corporations often cost more to set up than other structures, and they require more extensive record-keeping, operational processes, and reporting. Limited liability corporations, LLC. An LLC offers a combination of tax benefits and liability for small business owners. This is often the preferred way to set up a business for starting out in the remodeling industry. Now that you have a name, and have decided how you want to register your business, you can reach out to your local Small Business Administration office to get the information you need to get started. Again, don't forget the license. Most states will require a contractor's license, so this is the time to research the proper licenses and permits you'll need to avoid any legal trouble down the road. The next part of the video is not specific to the remodeling business. Nevertheless, this knowledge is essential for success in the remodeling business, as well as in any other business. Ignore it at your own peril. Operating a successful remodeling business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. Finding a niche. Small businesses range in size from a manufacturer, with many employees, and millions of dollars in equipment, to the lone window washer, with a bucket and a sponge. Obviously, the knowledge and skills, required for these 2 extremes, are far apart, but for success they have one thing in common. Each has found a business niche, and is filling it. The most critical problems you will face, in your early planning, will be to find your niche, and determine the feasibility of your idea. Get into the right business at the right time, is very good advice, but following that advice may be difficult. Many entrepreneurs plunge into a business venture, so blinded by the dream, that they fail to thoroughly evaluate its potential. Is your business idea feasible? Before you invest time, effort, and money, the following exercise will help you separate sound ideas from those bearing a high potential for failure. Identify and briefly describe the business you plan to start. Identify the product or service you plan to sell. Answering yes to any of the following 3 questions means you are on the right track. A negative answer to all of them means the road ahead could be rough. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers, and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market, and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business? Must be divided into two parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses, and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a remodeling business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free remodeling business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.